Hi, everyone. My name is Anne-Marie Band. Today is February the 29th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're looking at SPY. We've got the PCE coming in just a moment or two, and so that's likely to jolt the market. We are trending higher in general, but notice we're in a mean reversion play where we're coming back to these moving averages, which are means, right? Mean is just a mathematical term for average. And so it's coming in to the very fast average. Last time we came in to the very fast average, we broke down, went to the slower average, bounced, and then pulled back to the slower average again, and then made a new high. This might be the same thing. Remember, what we really are very interested in is what the Fed is doing about quantitative tightening, quantitative easing, and what they're going to do with interest rates. And so the PCE is going to bring people into the space. Today, what we see is a market that is very quiet into the number. We'll see it spike or move in just a little bit. And here comes that number. For us, it's the same thing. We get down to the 504 area. It's a buy. We get up to the, it's a sell until the pattern breaks. And when the pattern breaks, then it's going to break out to the north or down to the south. So that's how you need to look at these trading structures. Let's go to the Qs. Right, we'll start at the day. Same sort of focus, right? We need positive retests for these guys. We're neutral to bullish, coming into the mean. Look at how it broke and then tested the lower moving average and then bounced. This is the same sort of thing. We're just in a little bit of a sideways patch, and the number might have come in a little bit hot. Core C, PCE, 2.8, forecast 2.8, previous 2.9. So I don't know. I think this is a wiggle that does a little bit of nothing because the forecast is almost identical to what the traders have. They just didn't want to look on the bad side of things. And so we remain caught in this formation. Now, I'm going to scooch down 433.50 for our Q's number. And I'm going to leave 437 up there on the high. My thought process is the same. We are buying the dips and selling the rallies. And as soon as that stops working, we're going to start changing what it is that we're doing. All right. The diamonds, which follow the Dow, look a little different to me, but I don't want us to trade those per se, simply because I don't like how those options move. And we trade these with options. All right. Let's get to the ES. All right. We had an up day, a down day, an up day, a down day. Should we have an up day today? Why not? Why not? We're going back and forth. John Hoagland's brother calls it barcoding. And so, that's what we're doing. Me, I call it piano keys, but same thing, right? We're moving up, we're moving down. There is a little bit of a grind to lower edges. Take a look at the volatility bands, though. We're caught in a range. And when we're caught in that range, we can buy the tests of the low end of the volatility band and sell the high of that same volatility band as long as we have a price confirmation. So to me, first place, the sellers are going to come in right here about 50 and 86, right? And if we head a little higher, 88, and then up into 92, right? That's roundabout where things are looking right now. You can see the folks trying to sell the top there. This is a sideways volatility band if I've ever seen one, right? So here we are with the NQs. Same sort of thing coming into the top of the band. Notice the NQs expand wider than the ES in general. Most of the times when we get really sweet buy zones, it's coming off the fourth standard deviation band. And that's what we're looking at here, relevant and respective to what's going on with price over here. So a short coming into the 4 right now at this 960 to 963 area. All right. And we're going to trade sideways. Let's take a look at the YM. trying to breach all of these very, very quickly for us. Here is a look at the YM. We looked at the diamonds a little bit ago. The YM has had 3 down days in a row, coming right into the higher moving average. So this is mean reversion, old resistance, new support. Buyers are going to try and hit the speed up and move it back into, say, that, I don't know, maybe here, 39,072. Let's see if that works when we're looking at our 30-minute volatility bands. Yeah, I mean, it sure does. Maybe we bring it down just a little bit. Over here, heavy congestion, breakdown. It should move up. These guys usually stop, though, at the second band, so it might not get up there. It might struggle with this price action number right here, close of 39,001. Bitcoin going absolutely bonkers, up at 63,000. I hope people aren't trying to short that. But the RTY is also moving pretty high. Expectation here, I'm not sure, right? But what I do see is dampening momentum and a sideways volatility event going over the last 3 days. So my suspicion is it's going to collapse off of this line right here, but it's clearly expanding, which means, short covering, sitting on these edges here. My thought is it's a short coming up with the stop being, 2071. Right? Sideways. There's no motion here. I don't know if they're waiting on non-farm payrolls or if they're waiting on, the Fed later in the week. I have no idea. I have no idea. Here we have oil. It is still in a buy the dip formation. It was sitting way down here at the 78. Now it's bouncing. Remember, oil traders love those round numbers. And so they get a little squishy there, so you've got to let them move. We're still a little bit sideways in this formation here. In my mind, the chart is compressing and potentially cycling up for another move. Right now, 80 still shows us as resistance, but it is clearly in a buy the dip formation. And that's what we'll do. Here is gold. Gold sitting right at the top of the, this thing is trading like Bitcoin, right? It's trading like Bitcoin. And so could it be breaking out? Potentially. I mean, interest rates are staying higher and gold is still also trending higher. So something is going on. I'm really not sure what. Last thing we'll look at is the bonds. The 10-year, taking a peek at this, I did top quiz with Topstep TV, and I failed the bond question, which I will never forget. $31.25 per tick is what this does. But take a look at this. It is not heading lower. Remember, if rates go higher, bonds go lower. If rates go lower, bonds go higher, and the bond market is saying, pump the brakes. We have no idea what's going on. Let's just sit sideways until the Fed tells us what's the matter. So that's it, a little bit broader. Go backwards. You can see the levels that I've got. Listen, we are looking at sideways patches. So we've got to trade accordingly. No matter where we're sitting, we've got sideways patches across the board. And here it is, up at this almost at the fourth volatility band, matching the price action. Notice the first pass fade comes into old resistance. It faded just at about 50.88, 50.87, and then bounced again. This is going to be the second place for that short. All right. Take care. Be alert. Watch your risk. And keep your stops tight, right? Keep your stops tight. Are we in a space from a daily perspective? We're in a buy the dip space? Absolutely. Will we move straight ahead? All green candles? I doubt it. All right. So take care, and I'll see you on the platforms.